Hello and welcome to today's episode of True Potential's Morning Markets. In today's episode, we'd like to cover off as the main data point from yesterday or this morning being the UK inflationary numbers. But first, we'd like to think about market performance from yesterday. So if we start with equities, most regions posted strong returns. And if we start closer to home in the Europe and the UK, we saw European equities post a return of 2.2% yesterday following some of the earnings reports that were posted. The likes of Volvo were in those who issued their guidance or their reporting for Q2, stating that they've managed to pass on higher costs to consumers and have maintained margins that way. The UK performed slightly weaker than Europe, but still posted a positive return of 1%. Now, as promised, we said we'd come round and speak about the UK inflationary numbers that were released this morning. Now, if we start with CPI on a year-on-year basis, that print came in slightly higher than market anticipation. So print came in at 9.4%. Market expectation was 9.3%, and it's once again higher than last month's reading of 9.1%. If we break that down and look at it on a month-on-month basis, that actually came in line with market expectation of 0.8, but once again, slightly higher than last month's reading of 0.7, so higher by 0.1 of a percentage point. Now, if we take a step back and actually look at the underlying components that build up the inflation basket, we can look at what's been driving inflation to the high levels that we've witnessed so far this year. These areas are going to come as no surprise to watchers of the video, where price increases are being driven from areas like energy and food. So if we think about those in more detail, energy, that's up 57% on a year-on-year basis and also up 3.9% on a month-on-month basis. That's been driven obviously by the conflict that we've seen from Russia and Ukraine this year. Food, if we look at the various different areas of food and different baskets, that's up roughly 9% this year. Now, these are areas that the Bank of England can't influence with its higher interest rates, but what is interesting is within the month-on-month components with the basket, we're starting to see some areas of deflation kick in. So they're negative inflation prints, and they're coming from the likes of vehicle parts, recreation, and visuals and audio. So what we're starting to actually see is the impact of Bank of England interest rate rises starting to push some of the parts of the basket into deflation or negative inflation prints. However, given the headline numbers still 9.4%, that's likely to still keep the pressure on the Bank of England to keep on raising interest rates to combat high inflation. So thank you for watching today's episode, and we'll see you tomorrow.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.